The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information. You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour at 11:50 a.m. KKNW, the Saturday, September 20th show. I'm your host and mortgage expert, Tina Mitchell. Thank you for taking time to talk money. I provide you the news on everything money, fresh information on the market trends and conditions in our local economy. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but I'm here to answer any questions or connect you with any of the guests that I have in studio on the show today. Please call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And my lineup in studio today, Scott Schaaf with Prime National. Your FICO credit score determines terms and interest rates that you pay on credit cards, car loans, mortgage loans, and even the cost of car insurance. And a lot of people don't know that employers actually are now looking at your FICO score to make a decision on whether they're going to give you that job or not. So you want to make sure that you have the best and highest credit score that you have. And if not, there is options to improve your credit score through credit repair. Good or challenge credit can benefit you, or a negatively good credit benefits you. Negative credit can have a huge impact on your life, your lifestyle, and the cost of everything that you're having when it comes to money. So it's an important segment to listen to today. Also, I have in studio Jen Nilssen with Real Living Northwest Realty. What's happening in our local real estate market? And is it still a good time to buy and sell? And how do you maximize your opportunity as a seller in the market? So it'll be great to talk with Jen today. And back in studio also, Matt Lofton with Davis Wright Tremaine. Today we're going to discuss what you need to know about transfer on death deed. So it's pretty exciting, especially for myself, and I know for Jennifer in studio on the real estate side that we have this information to share with our clients. So I'm excited for Matt's segment as well. Great information and great guest in studio today. For more information on any topic discussed, please call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And let's go ahead and start out the show today with a little money chat. Money. Mortgage interest rates. Do you ever wonder how mortgage interest rates move? Well, I'm going to share that with you during Money Chat today. Mortgage rates follow the bond market and mortgage-backed securities and based on the Fannie Mae 30-year bond. Similar to corporate bonds, mortgage-backed bonds trade all day, every day, which means mortgage rates move up and down all day and every day and follow what the bond market's doing. In general, as the price of mortgage-backed bonds change, so will the interest rates. This applies to conventional mortgage-backed by Fannie Mae and Freddie Mac bonds, FHA loans, VA loans, and USDA loans backed by Ginnie Mae mortgage bonds. The price of mortgage bonds are based on the supply and demand. So when Wall Street demands for mortgage bonds increase, all things equal, mortgage bond prices rise. Now, mortgage rates move in the opposite direction of mortgage bond prices. So if mortgage bonds are trading higher, you're going to see mortgage interest rates drop. If mortgage bonds are losing in their trading price, then you're going to see interest rates improve. Demand for mortgage bonds can change for a multiple of reasons. The most common is risk avoidance because most mortgage-backed bonds are guaranteed by the U.S. government. They're considered extra safe and unlikely to default. During periods of economic or political uncertainty, mortgage bonds tend to be in high demand, which leads mortgage interest rates at lower. The trading pattern is known as flight to qualify, and it's fairly common one. Now, with a weak economy, investors, typically you'll see that the investors are pulling out of the stock market and they're investing in bonds for the security of the bond market. In a stronger economy, investors want to see a higher return, so they're willing to risk a little bit more, so they'll pull out of the bonds and invest in the stock market. And so usually you're going to see opposite stock market from the bond market. We're seeing a great stock market. You're going to see not so great of a bond market. Typically, that's the way it's going to work. Now, also rates are subject to adjustments, price changes made by the agent security of the bond. So generic name for such adjustments is loan level pricing adjustments, and loan level pricing adjustments are similar to the middleman fees that they reflect in the risk of insuring a particular loan trait. So for an example, in mortgage interest rates might be a 2-unit property versus a single family home. You're going to see higher interest rates for multifamily versus single family. Also higher interest rates for condo versus single family. Investment properties, rates are going to be higher than primary, and rates will increase for borrowers with lower FICO scores, and they're going to decrease with borrowers that have higher down payments. These are all factors that are based on the risk of default. So I'm sure you could imagine that an investment property is going to be at a higher risk of default than a primary residence. Somebody that has a lower credit score, some challenges with credit, obviously are going to be at a higher risk of default than someone that has strong credit. So that's where you're going to see those adjustments at, all based on the risk factor. Now, things that don't control mortgage interest rates, aside from loan level pricing adjustments, there are no other direct forces in the U.S. rates. For example, it's commonly said that today's rates follow the path of the 10-year Treasury note, which is another government-backed insurance, but this is not true. Over the course of years, mortgage interest rates and the 10-year Treasury note will track together. On any given day, however, they will not. So there are plenty of days on which mortgage bonds and Treasury notes are different. The Fed's fund rate is also not linked to mortgage interest rates. The Fed fund rate is the overnight interest rate in which banks borrow money from each other, and it's an interest rate fixed by the Federal Reserve and used to speed or slow down the U.S. economy. The Fed funds rate and the 30-year mortgage rate are different by as much as 5% points over the last 10 years and by as little as 1.5 or 1% point over the same period of time. And last, mortgage rates are not governed by the Federal Reserve or any of its members or any of the elected U.S. officials. The actions of the nation's central bank can affect demand on the mortgage-backed bonds, but none can set home loan interest rates. So when you see the prime drop, it doesn't mean necessarily that the mortgage rates are going to increase. Sometimes when the prime drops, you don't necessarily see mortgage rates decrease. Sometimes it does, sometimes it doesn't. It depends on the strategy. The prime is increasing or lowering prime rate based on trying to improve the economy or not. So if it works, then you're going to see the opposite. And if it doesn't, you'll see it follow. So just some interesting things on interest rates, mortgage interest rates, and how they work. And since that's my arena, I thought I'd bring some of my expertise into studio. Coming up next on the Money Hour, is it bad credit holding you back from getting approved for a mortgage, car, or credit card? Having good credit scores is extremely important to your financial future. And if getting denied for having bad credit is a problem for you, today I have a solution. Scott Schaaf with Prime National right here on 1150 AM KKNW after the short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we can get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
Is bad credit holding you back from getting approved for a mortgage, car, or credit card? Having a good credit score is extremely important to your financial future. If getting denied for having bad credit is a problem for you, we're the solution. Newsweek magazine named Prime National the industry leader in credit repair. They have been in the industry since 1998 and have an impeccable A-plus rating with the BBB, fully licensed with the Department of Justice, bonded for $100,000, AAA rating with the Business Consumer Alliance, and offers a 100% money-back guarantee. Get your credit back on track and secure your financial future. For a free, no-obligation credit consultation, call Scott Schaaf directly at 954-228-6644. Again, that number is 954-228-6644.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, September 20th show, bringing in expert advice and inside knowledge on today's events in our local economy and how it can affect your money. If you are hearing my show at a different time or day, you're listening to a rebroadcast, but you can always call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to ask any questions or to be connected with any of the guests that I have in studio. And right now we're talking with Scott Schaaf with Prime National with a little work and a great game plan. You can change your credit score and ultimately change your life. And I'm just excited. Scott, thank you so much for being back and, well, actually being on the phone. We don't have Scott live here because he doesn't live in Seattle. But Scott, thanks for joining us in studio.
Thanks, Tina. It's great to be here.
And a little background of Scott. Scott has over 10 years experience in the credit repair industry, currently works with banks across the country and has helped hundreds of people reestablish their credit. Prime National is a lending credit repair company is a leading credit repair company in the nation with an impeccable A+ rating with the Better Business Bureau, fully licensed with the Department of Justice, bonded for $100,000 AAA rating with the Business Consumer Alliance, and offers 100% money back guarantee. So, Scott, let's go ahead and start out today with what's going on with credit industry with the recent bill introduced, Fair Credit Reporting Improvement Act 2014, and the drastic changes that it could have if it passed.
Yeah, this bill was just introduced about a week ago by Representative Maxine Waters, Democrat out of California. So it is still just a bill, but it would make drastic changes to over 650 million consumer credit reports and their credit scores almost overnight. There's a lot to it, but the main highlights are any adverse real estate loans that were deemed to be caused by deceptive lending practices would have to be removed. And normally, we all know that items get removed off your report in 7 years, but all judgments, paid tax liens, collections, late payments would have to come off the report in 4 years versus the 7 years that the bill proposes. And any and all adverse debts would have to be removed within 45 days of payment or settlement. And also regarding private student loans, they would have to be removed if the debtor makes 9 consecutive payments on time.
Really? So this is great.
Also
go ahead, Scott.
Bankruptcies would go to 7 years instead of 10 years as well.
So this is great news if it passes. What do you think are the chances, Scott?
Well, I'm not a politician. I don't want to necessarily speculate. It just got introduced. I think in a little bit more in the future, we'll have a better understanding of it. This is something that's brand new, but it definitely will be the most aggressive overhaul of the Fair Credit Reporting Act since 2003. Got
it. So exciting news. Hopefully it does, especially, working in the mortgage arena. It would be nice to see some better favorable credit scores for people that have had some challenges with the economy. So, Scott, let's talk about new FICO scoring model.
Yes, FICO, the company that calculates credit scores, is tweaking their system. So this is going to be available commercially in the fall of this year. And it would mean that your credit score will not be affected by unpaid medical bills or any overdue bills that you have already settled. Now, I wouldn't hold your breath because generally it takes several years before lenders gravitate off the older versions to the newer versions and achieve critical mass. The current version right now that's being used was actually implemented in July of 2009, so it's actually 5 years old. And it really takes some time before you start seeing a large volume of lenders moving to the newer systems. And in the mortgage environment, Fannie and Freddie have prevented the entire mortgage industry practically from even being on the now current version of the FICO scoring system. So when the new version comes out in the fall, mortgage lending will be based on a model that's 2 generations old. So we may be having this conversation in 2 or 3 years, and the newest system may not be used in the mortgage environment but may or may not have critical mass in the auto or credit card environment.
Yeah, when I know after the crisis in 2008, can't remember exactly when it happened, but when the actual brackets that you were in had a huge change, whereas 720, as you know, was the highest credit bracket you could be in when it came to mortgage interest rates, and now it's 740. So there was anything under 760 is considered poor credit, whereas before it was 720. So a lot of changes happened there, and the timing was just bad because, again, it was right after the meltdown. What can people do to improve their credit right now, Scott?
The most actionable thing that you can do is to pay down your balances. That's number one. Now, there are a couple other options. One is adding yourself as an authorized user, and what that is if you have a friend or family member that has they have good credit. Let's say they've had a credit card with a high limit but a low balance on it. They've made their payments on time. Just by making a phone call to the credit card company, they can add you as an authorized user, and that credit card will then reflect on your credit report as if it was yours, even the past history. So if they've had it going way back in time, that will go on your report as well. So that's a great way. It's free, doesn't cost you anything. The second option is you can get yourself what's called a credit builder loan. A lot of people don't know about this. It varies from state to state. If you just Google credit builder loan in your state, you can find a bank that will do it. You just give them X amount of dollars. Let's say you give them $1,000. They'll then hold that money, and you make payments on a loan. It's a short-term loan, usually about 6 to 12 months. And at the end of that loan, they will give you the money back, usually with interest. It'll just sit in an interest-bearing account. And the third option would be you can get yourself a secured credit card. You give the bank $500, $1,000. They then give you a credit card with that limit. Just keep your balances very low on that card and just pay it in full each month. Yeah, and I think the authorized user is that is a really easy thing. And if you didn't hear Scott, again, just as a repeat, because I think it's really important, is to get authorized, get on those the cards that are the older accounts. And I can't tell you how many times, Scott, I've had people come in and before talking with me have done things to their credit report. And one thing that they've done that you cannot reverse, as you know, is closing out accounts. And what you have these myths out there that if you got open accounts that you're not using, close them out. The reality is, if they're established accounts, you never want to do that because it has an instant effect because you don't have that history. So going back and getting added to as an authorized user to some of these older accounts can make a huge difference. Sure, that's a very good way, and it doesn't cost anything.
So what is credit repair, and what does Prime National do? Can you explain that to my listener, Scott?
Absolutely. And a lot of people aren't aware what credit repair is. There are a lot of steps that you can take to improve your credit by going to a credit repair company. Prime National actually just recently ranked number 1 in the nation. What Prime National does is disputes the questionable negative items that are on your credit report. It's a 30-day process. We use federal law, the Fair Credit Reporting Act, to initiate disputes with the credit bureaus. And our legal team really goes after with over 20 different disputes per line item. And in 30 days, the credit bureaus reply back to our clients with the results of the investigation and any items that have been removed from the credit report. And if you do have a permanent removal of negative items on your report, that can in turn raise your score.
Yes. So, Scott, I've mentioned myths a little bit. What are some other myths out there regarding credit scores?
One popular myth is that credit scores and credit reports are the same. Credit reports and credit scores are not at all the same, but people use the two terms interchangeably as if they were, and that's where many errors are made. A credit report is simply a collection of information about a customer, including their personal information, their liabilities, financial-related public records, third-party collection accounts, and inquiries. A credit score is a numeric grade based on most of that information, all but the personal info. And it's a product that's sold along with the credit report, but it is not at all part of the credit report.
Yeah, that's a good explanation, and I don't think very very few people know that. What about the difference between mortgage report and consumer reports? Can you talk about that?
Sure. Well, before I get into that, one more myth that a lot of, and I get this a lot, and this is perhaps maybe the most popular one, is that credit scores are used by employers as part of employment screening.
And I just talked about that before bringing you on, Scott, and I think that, people do not realize that. So go ahead.
Well, real quick, they can see your credit report, but they cannot see your credit scores at all. They're not even available to employers. So,
but they're looking at the actual information that's on there as far as delinquents, just not your score.
Right. They can be used for employment screening purposes, but they cannot see your actual scores. So.
Yeah, and I didn't know that, Scott. I knew that, their employers are looking at credit, but I always imagine that they're actually looking at the scores, but which would actually be better. The fact that they're looking at the actual credit report, that seems really bad, that they're seeing everything that's happening, not just based on your score.
I guess, it just depends on, I guess every situation's a little bit different,
Sure.
But, that's just the way it is. I'm just here to report.
No, I completely understand. What about the difference between mortgage report and consumer report, Scott?
Yeah. When somebody goes, the average person, when they want to check their credit, they go to a website. You see them advertised all over the place on TV. Sign up for a free trial or pay $20 a month, and you can pull up your credit and you can see what your scores are, and you can monitor your credit. The reality is with those sites is that looking at your credit scores, they're extremely inaccurate when it comes to what your actual score is. And in fact, some of them, there's even a plus or minus 100-point differential. So some people will pull their credit and they'll say, oh, wow, I have, a 740, and they'll go into, then that's what's called a B2C report, business to consumer report. When someone goes in to go to you for a mortgage, you pull a completely different report that people don't even know exists, and it's much more accurate. And they could be up to 100 points less on that report and not even be in the ballpark to qualify. And there's a huge variance there that a lot of people aren't aware of when it comes to that.
And it is really frustrating in my seat when clients, they've pulled their consumer report and they have a lot higher credit score. It's a hard conversation to have, especially when it has such a huge impact on the cost of their mortgage or an impact not being able to get the mortgage at all.
The best site to go to, they only have about a plus or minus 15-point differential, is identityguard.com.
Identityguard.com.
Right. We've tested all of them and we've compared them to the actual mortgage reports, and they're by far the best.
Okay.
Most accurate to go to.
And let's talk about how often your credit score gets updated.
And this is a good one, too, that a lot of people don't realize. It's not as if your credit score is sitting there on a daily basis and the number changes constantly on a daily basis. Your score is only populated when it's actually pulled. So when you pull the report, it gathers data from multiple different sources and then comes up with a score. So it's not just taken on a daily basis and changes whether you look at it or not. It's only populated when you actually pull the report. I
learn something new every time I talk with you, Scott. I didn't realize that.
Well, that's why I'm here.
Yeah. Will you give me that, give me the best place for if a consumer wants to get a consumer report and not have a hard pull from a lender? What is the best resource out there?
What to go to is identityguard.com. Reason being, they're the most accurate. They're only about a 15-point differential. Credit check totals about 40 points. Privacy Guard's about 25 to 30. So Identity Guard's the best. They're only plus or minus 15 points when it comes to their actual scores.
Okay, perfect. So, Scott, I've got just a second. We've got about 30 seconds left here. A wrap-up for my listeners before we end our time.
Well, if there are any listeners that are looking to improve or fix their credit, tell them to give the show a call. I'll provide them with a free consultation, go over their report with them, and we can go after any negative items that are on their report to obtain a permanent removal. No matter what items are on their report, we'll be here to go over that with them. I
appreciate that, Scott. And the show number is 1-855-400-1150. Again, it's 1-855-400-1150 or online at themoneyhour.com. And if you missed any of Scott's segment or you want to listen to previous segments, just go ahead and put in credit repair, bring up his information, and you can listen to all of his segments. Scott, thank you again so much for spending time with me. I appreciate it. And we'll get Victoria to get you booked right back in.
Awesome. Always a pleasure. Thanks, Tina.
Have a great day.
You too.
Coming up next to the Money Hour, how do you get top dollar for your home? And is it a seller's market right now? Well, Jen's going to give us the answer. Jennifer Nilssen with Real Living Northwest Realty right here on 1150 AM KKNW after the short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
Are you looking to move to the East Side? If you're ready to plant roots in one of the many fantastic East Side communities, then it's time to talk with Jennifer Nilssen with Real Living Northwest Realtors. Jennifer Nilssen knows the East Side real estate market inside and out and has spent the last 12 years helping buyers locate the right East Side house for them. Jennifer specializes in relocation and buyer representation in Kirkland, Bellevue, Redmond, and Bothell. She makes the moving process stress-free and fun. Jennifer Nilssen with Real Living Northwest Realtors has helped hundreds of families buy homes in Kirkland, Bellevue, Redmond, and Bothell since 2002. And she would love to help you make the jump to East Side living.
Hi, this is Jennifer Nilssen with Real Living Northwest Realtors. To request a free relocation packet and East Side real estate guide, please visit www.livekirklandwa.com or call me directly to set up a free, no-obligation new client consultation at 206-853-1491. That's 206-853-1491. I look forward to helping you find the perfect East Side home this year.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, September 20th show. It's a great day to talk about money, and that's why I'm here with you and what the show is all about, how to make money, save money, and build a better quality of life for you and your family. If you're hearing my show at a different time or day, you're listening to a rebroadcast, to talk with me or any of the guests that I have in studio, you can pick up the phone and give the show a call, 1-855 400-1150. Again, that's 1-855-400-1150, or online at themoneyhour.com. And right now in studio, Jen Nilssen with Real Living Northwest Realty, discussing pricing strategies, best in class, and a lot more regarding real estate. Jennifer, thank you so much for coming back in studio.
Thank you, Tina. It's good to be here.
It's fun to have you. And a little background about Jen. Jennifer was a top producing agent for EQ Real Estate from 2003 to 2005 and moved to TEC Real Estate and Homes in 2006. Jennifer made the move to Real Living Northwest Realtors, a national franchise that was recognized by National Association of Realtors as one of the fastest growing real estate companies in the U.S. in 2011. Jennifer was nominated by her peers for NAR Magazine 2006 30 Under 30 feature. Yeah, she's a little bit younger than I am. Whole nother show.
I was back then.
Yeah. Well, you're still a lot younger than I am. And is a member of SCAR NAR, WAR, and sat on the 2012 board of Seattle Young Professionals Network. She is also a designated certified negotiation expert and taught as an instructor for the Washington State Housing Finance Commission. In 2010, Jennifer earned her Green Broker designation through NAR and earned her Earth Advantage Broker designation as well. Jan, again, it's so exciting to have you here. I know you're so busy in your real estate practice and in such high demand, and to have you in here studio with me is awesome.
Thank you, Tina.
So let's go ahead and start out with a question that I think a lot of people are asking right now. Are we still in our local market here in a seller's market?
Yes, we are. Technically we are. Right now in King County, there's about 2.8 months worth of inventory.
Okay.
And I would say that traditionally 6 months worth of inventory is what's considered a balanced market. And And beyond just the numbers, you can feel it. There's still, even as we get out of summer and get into fall, you can still feel all the multiple offers out there and kind of the energy. So yes, I would say it's a seller's market.
Okay. So Jen, when you're talking with your sellers, are you, when I know the answer of that you are, but I think for a seller to hear on that they still have to do some things to get top dollar. You don't, just because it's a seller's market doesn't mean that they're going to get top dollar without putting some real strategy and effort into it. Can you talk about that?
Absolutely. They can't just take this market for granted. They still need to be an active team member with their agent, and they can't afford to be lazy. I mean, especially even though the market is still strong, especially as we enter into the fall and presumably a little bit slower market, sellers need to be active participants in getting their home sold.
And I think, and it's they may get it sold, but to maximize and get top dollar. And I like how you said a team with your agent. I mean, you're really hiring this real estate professional, and hopefully you've got one of the best in the industry. And if not, you need to pick up the phone and call, because I've got one sitting right across from me right now. But it's important to have that great representation and those strategies. Just give one little tip, Jen, in maximizing your dollar right now in this market.
Well, one of the things that you can do is chances are if you've done everything right, you are going to get multiple offers on your home. I would say about 80% or greater of the listings I've had in the past year have had multiple offers on them. And one of the things that sellers can do is really play their cards right and give their agent authority to share details of the other offers. Oftentimes, I guess a lot of sellers don't know this, but agents' hands are tied. They're not allowed to disclose the terms of other offers without the seller's permission. So most of the time you find agents going back to the buyer's brokers and saying, just bring us your highest and best offer. Well, that kind of leaves the buyer's agent sort of just making a shot in the dark. And what I find is that it sort of builds camaraderie with the other agent and with the buyers if they feel like they have an inside track. It doesn't mean give away the exact terms of what the other folks are doing, but maybe just guide them. And I always find that I get much better results that way. And I would also say if you're in a multiple offer situation, don't be shy about asking for terms that you want other than the price. I just had a seller, I've never had this happen before, negotiate 4 months of free rent after closing.
Wow.
It just because they put it out there and the seller bit, or excuse me, the buyer bit. So don't be shy about that.
And that's it's great to hear, Jen, and that's one thing in any industry, and you see it so much in the real estate industry right now that you can have complete opposite advice, and it's it's right or it's not right. And the strategies is so important. And I just really love, sharing with making it a good playing field and get that camaraderie, which gets those bids and things really working up to maximize the seller's dollar. That is awesome. What is the theory, Jen, of best in class?
So I always discuss with every seller that the idea of the best in class is that among your competition, that you are the most competitive or the best in class in 4 different areas. And those areas are the marketing that you do, the price of the home, the way the home shows, and the structural condition of the home. Okay. So say, for instance, you've got 10 homes on the market in your immediate area, and there is a buyer, and the buyer is going to go out on a Saturday and take a look at all of those 10 homes. You need to make sure that your home has the sharpest marketing, is the most competitively priced. It feels the coziest and the best to the buyers out of all of the homes when they go there. And it's evident that it is in good structural condition, that there's pride of ownership there. And if you can nail all of that and look better than all of the competition, then you're sure to sell your home as soon as possible and for top dollar.
Great advice. Best in class is what you definitely want for the top dollar. So how can sellers put that theory into action so that they are best in class?
So first things first, the first thing that you need to do is team up with your agent at least 1 to 2 months in advance. All too often I have sellers that are coming to me a week to 2 weeks before, and it's just not enough time to get you ramped up and prepared to be as competitive as you want to be. Beyond that, you need to make sure that you've got a strategic marketing plan with your agent. You need to have professional photos, and you need to have targeted online presence. Then you need to have a clear pricing strategy, and that does not mean listing your home at a high price. It means finding out what market value is, and then oftentimes listing it for 1 to 2% below in order to create that frenzy.
Got it.
And then beyond that, you want to make the home look as presentable as possible, which usually includes staging, which the seller pays for, but it is worth every penny. And lastly, you should have a pre-inspection. You should have a professional come to the home and get any of the items out of the way that might be a hindrance to your closing. And you don't want any surprises. It's best to spend that $400 to $600 up front and know exactly what's going on going into it.
And that makes so much sense, because guaranteed the buyer is going to find it no matter how if they're going to do a pre-inspection or if they're going to make an offer with an inspection contingency. The worst thing you can do is get your home off the market and with somebody else, and then waiting for that inspection, something comes up, and then you've got to put your home back on the market. Otherwise, you're going to ultimately be giving a lot more than you would if you would have known up front, because you want to keep that deal together, right, Jen?
That's exactly right. And in most cases, $2,000 to $5,000, and that's even the high end, we'll fix almost everything on that report. And if you've got the report, honestly, in most multiple offer situations right now, buyers may even waive the inspection. And got that gone.
Yeah, that's awesome. So now, Jen, let's talk a little bit more about, maximizing the profit by what you're actually spending and putting into the home. So what is the most important things for a seller that they should be spending money on before putting it on the market?
Two things come to mind right away, which is going back to that pre-inspection. So having the pre-inspection, $400 to $600 will let you sleep at night. You will have that off your plate. And again, you'll probably have to make minimal repairs, but putting that money into the home is going to save you so much more in the future. Like you said, the buyer's going to come back and try to renegotiate, and they always add on more to the price than it's actually going to cost to fix it. The second thing is staging, and that is usually a tough pill for sellers to swallow, but I'm telling you, it makes all the difference. The Real Estate Staging Association says the national average for sellers who have their home staged is that they will sell for 34 days faster than a home that is not staged, and on average for 3.4% more. It makes all the difference. So, it's going to be probably in the ballpark of $3,000 to $4,000 to get a 2,000 square foot home staged, but you will make that back twofold.
Yeah, so get that pre-inspection and get the home staged. And what about the best pricing strategy, Jen?
So, in my opinion, first of all, be realistic and let your agent guide you with the pricing. No Zillow here, folks. It is a tool, but your agent is the local expert.
Yes.
And if you have questions, even after they present the value to you, maybe it might be worth taking a trip with your agent out to go see the local competition, because that's how buyers are going to buy, and you need to see how you stack up. But only go with them if you're willing to be objective and see your house in the light of a consumer.
Sure.
So, first of all, be realistic about your value. And then beyond that, I typically like to encourage sellers to undercut the market value price by 1 to 2%. And I will tell you that in most cases, it will create the feeding frenzy that you need to bring multiple buyers, get that bidding war. And in the last two instances where my sellers have done that and undercut market value by 1 to 2%, they ultimately sold the home for $51,000 and $37,000 more than the market value.
Wow.
So yes.
And if you just think about it, you're looking online and you're looking at price. I mean, that's you start out with price. Everything's sorted based on price. And if you've got one that's just a little tiny bit better, it really seems like a lot better.
And it's going to
have that demand going there. That's a great strategy. So, Jan, last question before I take it to break. Are open houses necessary in a seller's market to help sell that home?
Oh, absolutely. You know, a lot of sellers find open houses inconvenient. The neighbors are coming through to be looky-loos. But you know what? These looky-loos, they sell houses.
Yes.
And they like to talk to their friends and family about the homes that are selling in their neighborhood. And I would say a fair amount of buyers that don't come through the MLS will come through your neighbors. In fact, it's maybe a good idea for a seller to create a little gift or a marketing piece or an agent to do that in order to give to the neighbors to encourage them to bring buyers that way. And, you know, it's not uncommon when I have open houses now to have 40 to 50 people through. I usually stop counting around 30.
Wow.
And just the other day, an agent in my office had an open house in Bridal Trails with over 100 people through. So I can't think of any better exposure. Than 100 buyers, all seeing other buyers in the house at the same time.
No kidding. That is awesome. And that's why, Jen, you're so successful and you have so much respect from other realtors in the industry because you do all those extra special things. And each one of those things is going to maximize profit. And I do want to mention the buyer side because Jen works with a lot of buyers as well and takes the same attention and care to her clients. So again, I just so much appreciate having you here and sharing your expertise with my listeners.
Thank you, Tina.
If you're thinking about real estate, buying or selling, you need to pick up the phone and give Jen a call. 1-855-400-1150. The show number is 1-855-400-1150, or you can find her online at my website at themoneyhour.com and get directly connected with Jen that way. Thanks again, Jen. Enjoy the rest of your weekend.
Thanks, Tina.
And coming up next on the Money Hour, a transfer of death deed allows a property owner to directly transfer the ownership of real estate at the owner's death to whom the owner designates by name. Really important for the real estate, for me and the financing. I'm just excited to have Matt Lofton here with Davis Wright Termaine right here on 1150 AM KKNW after this short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, September 20th show. I'm here to help you build a strong financial blueprint 1 week and one show at a time. If you're hearing my show at a different time or day or listening to a rebroadcast, you can call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to discuss anything regarding money with me or to talk to any of the amazing guests that I've had and have in studio today. And in studio right now, Matt Lofton with Davis Wright Termaine. If you're owning real estate or you're thinking of purchasing it, you will want to know about transfer on death deed. Matt, thanks for coming back in studio again.
Sure, Tina.
Regular
Appreciate
contributor to the show now.
Yeah, happy to be here.
My guy on the estate planning. And I just, we talk about procrastination and I see it in all areas of financing, but nothing, as much as you do in estate planning. And it's such an important part of our financial blueprint to make sure that we're dialed in. And I'm so excited about the topic that we're going to share with Matt today. And a little bit of background, Matt is an attorney with a law firm. He counsels individuals, families, and businesses on a broad range of trust and real estate matters, including business planning. He advises clients on tax efficiency, wealth, and property transfers made during lifetime and at death through the utilization of client-specific planning techniques, including charitable planning, business succession planning, and special needs planning. In addition, Matt represents personal representative executors and trustees and administrative of trust and estates. Matt is an active author and speaker for both the State Bar of Texas and the Washington State Bar Association. Matt, again, thank you so much for coming into studio today.
Sure. Happy to be here.
And so let's go ahead and talk about what's going on in the area of estate planning that our listeners should know. I already gave a little secret, but maybe somebody didn't hear it. What is it, Matt?
Yeah, well, I know, Tina, your show sometimes focuses on issues surrounding the ownership and financing and transfer of residences and other real property. And so I'm sure you've probably lost a lot of sleep at night thinking, I know in Washington you can transfer almost any type of property at death without the need for probate. So bank accounts, with pay on death designations, transfer on death designations for securities. Mm-hmm. And I'm sure you've spent many nights thinking, well, why in Washington do you have to go through probate or use a revocable living trust to transfer real property? So I'm here to tell you that you can sleep a little easier now.
Nice.
Because on June 12th of this year, the governor of our state signed into law the Uniform Real Property Transfer on Death Act. And so Washington became the 13th state in the country that allows for the use of transfer on death deeds.
And how exciting news is this, Matt? I'm like, and I'm not being sarcastic. I just think that this is an amazing thing. And I'm going to talk to every single client that gets a mortgage from me. And I'm sure Jen on the real estate side is going to be talking to her clients as well. So what exactly is a transfer on death deed, Matt?
Well, a transfer on death deed is similar to any other type of deed, but it's a deed that's made and recorded while the property owner is alive, but it automatically transfers title to the property upon the death of the owner to another person or that's designated in the will. And so the deed really isn't effective until the death of the property owner. Mm-hmm. Now, what's important, because the transfer of the title doesn't officially occur until the property owner's death, the owner retains all the benefits of home ownership during their life. So, they still get the home ownership tax exemption on sale, any property tax breaks or other tax advantages, created by home ownership. Also importantly, when they pass away, the property still receives a step up in income tax basis at their death, which would be the same as if the property were to pass by will. So the basis in the hands of the grantee of the property, so the person designated in the will as the beneficiary of the property, their tax basis is adjusted to the fair market value of the property at the date of the owner's death. So it would eliminate any inherent capital gains created by the property's appreciation during the property owner's life. The mechanics of the deed are pretty easy. Like I said, it's just like another deed. But in the deed, the property owner would recite that the deed isn't effective until the grantor property owner, I'll use that term in kind of in between both of them, grantor or property owner,
okay.
their death, and they would specify who the real property is to pass when they, and then they would record the deed during their life. Mm-hmm. And so the deed would then be recorded. It wouldn't be effective yet, but the property title would still remain solely with the grantor, like I said. And the grantee, so the person who receives it at the death, would have no interest in the property during the grantor's life. Now, importantly, during the grantor's life, they can freely revoke the deed at any time by signing a written revocation and then, filing that with the real property records so that they can show that title is clear. Mm-hmm. Or they could file a new transfer on death deed with a different grantee beneficiary. And in that case, then the second, the first TOD deed, which I'm going to say transfer on death, TOD deed would be revoked.
You just call it the Todd deed.
Well, I guess, yes. That's a more advanced term. Yeah, I guess I could use that.
So,
yeah.
Matt, other than the benefits that you've mentioned, are there other uses for the transfer on death deed that you see?
Sure. I think the principal one why people would want to use this, maybe if they have an interest in avoiding probate.
Okay.
Some people really don't want to go through the probate process, going through the courts to get an executor appointed to transfer things, maybe for privacy reasons. I will say Washington is a very efficient and inexpensive state with respect to the probate process. But, I think on average, using a TOD deed would actually probably transfer title to a property quicker than going through the probate process. So that, that's a consideration.
Okay.
Another thing that I see that would be an advantage would be to use TOD deeds to fund revocable living trusts. Up until this point, I know people and probably your listeners who use revocable living trusts can tell you that if you're trying to transfer any sort of encumbered real property, so property that has a mortgage on it, into a revocable trust, so you're transferring title, you're going to come up. You may butt up against some sort of requirements in the loan document that may require, say, the lender's consent to transfer title to the trust. There may be a due on sale or a due on transfer clause that would accelerate the payment of the loan on any transfer. Also, if you're holding a property in a trust now and you want to refinance, oftentimes you're forced to take the property out of the trust for a certain period to refinance and then put it back in. So you can avoid all of that if you're looking at your main focus for using that revocable living trust is, like I say, to avoid probate. You can still get the same advantages of doing that with a TOD deed, but because the owner still technically has title to the property until their death, they don't have to go through all of these requirements, or they don't risk violating any of the lender's requirements on any loan documents.
So, Matt, are there any drawbacks to the transfer on death deed?
Well, there's not. I wouldn't say that there are huge drawbacks. Not major ones. So, with any non-probate device, be it any like using joint accounts, using right of survivorship on bank accounts, using a TOD, there's probably more opportunity for abuses, maybe trying to get someone to execute a deed under duress, undue influence. There's kind of more protection that's available using testamentary documents like wills or trusts. Also, there could be some confusion. Using these deeds can create some confusion for the personal representative of an estate if they're appointed, where they may have a piece of property that they think is they need to transfer through probate by the will or by intestacy, and so they would execute a deed whereby they may not even know that these TOD deed is out there that automatically has already transferred title to the property. So it's important for personal representatives now to maybe run a full title report on any real property that they know the decedent owned at their death. I'd also probably say, to do a TOD deed, the grantee beneficiary of the property doesn't need to be notified and doesn't need to sign the deed. And so really a grantor could transfer property to a grantee without the grantee even knowing. So say the grantor creates a deed, leaves this property to the grantee doesn't know, and upon the grantor's death, the title automatically transfers. The grantee may not find out. They may not even want the property. And if 9 months has passed beyond the death of the grantor, the grantee really doesn't have any ability to disclaim the property or to give it back. So they're stuck with a piece of property that they now own, which which may create gift or estate tax liabilities, or if there's environmental liability on the property, they're just asking. They just inherited a whole bunch of problems that they didn't even know that they had.
Wow, that's why would they not require? But that's a whole other thing, Matt. I want to stay on task here because we've got so much information I want to go over with you. So let's talk about tax liability created. Are there tax liabilities created by executing a TOD deed?
Not normally, not unless there's going to be something for consideration. As you know, any transfer of title to property in the state of Washington, the Department of Revenue says they have to file what's called a real estate excise tax affidavit, in which they either have to pay an excise tax on the transfer or they might be exempt on the transfer. Whether you're exempt or you're not, you still have to file this affidavit. Normally, that affidavit is filed with the Department of Revenue when you do the deed to transfer the title, because that's when the title is actually transferred. But, with TOD deeds, the title doesn't actually transfer till the death of the grantor.
Okay.
So the deed can be filed by the grantor, but the real estate excise tax affidavit doesn't need to be filed until the actual death of the grantor by the grantee. So this is a little bit different. There's actually right now, because this is so new, there's actually a conflict in the law, but the actual statute and an emergency rule that was issued by the Washington Department of Revenue. I would say the Department of Revenue's rule probably should take precedence, and so the affidavit doesn't need to be filed until the grantor's death by the grantee and needs to be signed by the grantee at that time. Okay.
So, Matt, what if the property owner sells or gives the property after recording the TODD?
Under this scenario, the actual sale of the property basically revokes the TOD deed, and so the grantee that's designated in the deed loses that the title to that property. So it would actually, the sale would trump the TOD deed, and the deed would just no longer be effective at the grantor's death.
Okay. What if the owner records a TOD deed but later makes a will giving the same property to someone else?
Yeah, the law actually states that the deed would actually supersede the will. So this would be a scenario where you did a TOD deed, you left the property, you specified you wanted to go to one individual. In the will, you want to leave it to another person in the will. You specifically say that. In that scenario, the gift in the will is void and it wouldn't apply. So the TOD deed actually trumps the will.
Okay. And what if the property conveyed by the TOD deed is collateral for a debt or there's a mortgage on the property?
Yeah, I spoke a little bit about this before, and because the transfer of ownership doesn't take effect until the grantor's death, recording the deed shouldn't violate, like I say, any due on sale clause or due on transfer clause to accelerate the payment of the debt. So that's an advantage. Another point, the beneficiary grantee takes the title subject to any lien securing the debt, but it doesn't become personally liable on the debt. So this is still kind of the similar scenario as if you inherited by will.
And Matt, I've got so many questions around this. I'm just bummed out. I don't have more time, and I need to personally talk to you about how we're going to get it set up for Dave and I and my stepdaughter Stephanie to make sure that we're all taken care of. But it's always a pleasure to have you, and I encourage, if you're listening today, it's really important to make sure that you are taken care of in all aspects of your financial situation. And Matt is just such an amazing resource. Pick up your phone and give the show a call at 1-855-400-1150. Again, it's 1-855-400-1150, or go online to themoneyhour.com and I'll connect you directly with Matt. Matt, thanks again for hanging out in the studio with me and for the amazing information.
Well, yeah, happy to help. I'm glad I'll be able to help you sleep easier now.
You definitely will. And this is your host and mortgage expert, Tina Mitchell, signing off for the day. I want to thank all of my listeners for being here today and listening to the show. And I'll be back same time, same place next weekend. Enjoy the rest of your weekend. Have a great one.
Preceding program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, NLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.